All right, are we live? Hey, everyone. Welcome to another episode of Trading Bitcoin. I am your host, Tone Vays. Took the weekend off, having a great time here in Panama City. I'm here one more week, and then I am off in exactly 7 days to Turkey. So if you are anywhere near Panama City, definitely come down. Find me at any of the events that are happening and would love to grab a drink because we can all use it based on what's going on in the world of Bitcoin. Let's go to our charts. Great question by Shruti. Which mutton is better, goat or lamb? So, God, you're gonna get me on a tangent. So the word mutton is used for different animals, depending on where you are. And now, most of the time, goat is goat, and lamb is a young sheep, and mutton is an older sheep. But in some places, the word mutton is used to describe goat. I personally prefer lamb to goat, and I like it like boiled. So the best mutton that I've had was actually in Morocco. Now, I don't, Morocco was not, it didn't happen to be one of my favorite places to visit. I found the culture to be a little too aggressive for my personality. But the mutton on the streets, like the street fairs, man, it was incredible. Love the mutton in Morocco. And it was sheep, so it was lamb. Lamb and sheep is the same thing. Okay, now we're going to talk price. Enough mutton talk. So this remains, I believe this is going to be the final month of the low. So the month is coming to an end. We are more than halfway through the month, and here we are. People are asking, wow, well, no one wants to talk Bitcoin today, huh? Why is there so much fun around red meat and cholesterol and stuff? Because everything the government does basically is because most governments are scared that the world is overpopulated. So it's like, it feels like the entire goal of a government is to kill you as the sooner the better. That's why there is like they want to feed you stuff to prevent you from having a good sperm count. They want to lower the birth rate. And then they complain that the birth rate is low, so they have to import all the immigrants. Yeah, because very little the government does is good for you. Is good for your health. Let's start there. All right, let's talk price. Let's talk price. I'm gonna stop being distracted here. So let's look at the oscillators on our weekly scale. I like the fact that the RSI has been rising, even though we may make a new low in the price of Bitcoin. That is a great sign of divergence. Same thing with the MACD, and to some extent, the CMF. The CMF has also been steadily rising while the price is slowly circling the toilet bowl. And that's a good sign that divergence is coming. Now, speaking of price, let's take a look. Let's let's move the price to the front. Bring to front so that the price is in front. And as you guys know, I have been expecting a capitulation to happen any week now. Last week, this week, we can move these things along a little bit. It doesn't really matter. I am anticipating a bit of a capitulation. Are we going to fall all the way down to 10,000? Probably not. So I should maybe, I just grab like a weird thing, right? So do something like that. I mean, it's possible, but it is unlikely that we fall all the way that low. Like something like this is more likely that we fall down to 14. I'm hoping we only fall to 16 and a half. I don't want to see us break the MRI support line on a week and closing basis. But I do want to see us make a new low. I want to see us go to 16.5 and yet somehow by magic still close above 17.5. That would be great. Someone is asking for the catalyst for Bitcoin to decouple from the stock market. A country leaving the Eurozone, like one of the Eurozone countries saying we're done with the euro and we're going to go back to our own currency. That could be a decoupling event, an implosion in the bond market. It's coming. It's coming. Our allocation chart, we made the second lowest low in this swing earlier today. Guys, this chart looks horrible. It looks absolutely horrible. It looks like it's ready for capitulation, similar to what happened on June 10th. I don't think it's going to be as bad. I don't think we're going to fall as much. The capitulation that day, that 4-day candle, let's go from the support line. We're not even going to cherry pick it. We'll go from the support line to the close of candle. That was a 22%, 22.5% drop from the line down to the end of candle close, right there. That will take us down to 14.9. I really hope we don't see one of these 20% 4-day candles. So maybe 15% down to 16. People are asking if I saw Willie Woo's thread. I did see the thread. I also saw, some of the replies from guys like Greg Foss in them. I did see Willie's Twitter thread on it. I don't really have a problem with the futures market. I don't. I don't have a problem with it. I don't believe in the perpetual suppression of prices. I don't believe in that. I don't believe it in gold. I don't believe it in silver. I don't believe in the S&P 500. I don't believe in that. Acquire more Bitcoin. It will go up. I mean, the upside. No one gives a shit about gold. People actually give a shit about Bitcoin. Like gold promoters will tell you how important gold is. It's not. Gold's not that important. It's not. I mean, it's good for jewelry, and that's about it. Gold is not money anymore. We've moved past the Stone Age. We're beyond the Stone Age. Like, I'm sorry, where audio is lagging. Huh. That sucks. Yeah, my internet connection is not great today. We were past the Stone Age. Any recommendations on best book on nutrition? I don't really have a good recommendation. Start with a paleo diet, and then it's not even a book. You know what? Here's my recommendation. Just meet the code. Right here. Found it. So this is Michael. This is Bitstein's website. Right here. Just meet.co. Here it is. So this is your book recommendation. This website. So check that out. Everything here is clickable. Check that out. Personally, I do carnivore plus fruit, but this is just straight up carnivore. So you can start here. If you love vegetables, check out the paleo diet. I like cheese too much, so the paleo diet didn't work. Okay, let's go to the daily chart. The daily chart is super important. Before I dive into it, the financial summit was on a few calls this morning, trying to get really good people to come. I believe they are coming. It'll be awesome. People are ready to register. Some of people wait till the last minute, unfortunately, but come and join us. This is the resort we'll be at. Incredible people, all kinds of discussions about trading, investing. We have to make this list better. This is our notable past attendees. Sammy is definitely coming to the next one. Da Vinci is definitely coming to the next one in Bali. I was talking to Willie Wu, ironically, yesterday, trying to get him to come. If he can't make it in person, he usually does a video conference with us. So we still get to talk with him in a private session. So yeah, it's a great event. Okay. My calendar, I will be in Kazakhstan over here. I want to make sure I'm not going to be in Uzbekistan. Otherwise, I would add them both. But yeah, I got to add stuff to the calendar. I'll do that today. And then I'm in Dubai and stuff like that. Follow us on Instagram. Follow us on YouTube. Follow us on Twitter. Speaking of Twitter. Oh, man, I have to find that. That tweet is now so long ago. Guys, we are looking at an unprecedented switch. This has been a 22-year decline in interest rates, and that's about to change. You can see how every swing high in interest rates has been smaller. For the first time in most people's lifetime, because I don't know how many of you were traders before 1980. Probably almost no one watching me right now was a trader before 1980. You might have been born before 1980, but you weren't a trader, right? You would have had to be born in like 1960 to be a trader in 1980. So for the first time in anyone watching this channel trading career, you are witnessing a new swing high in interest rates. I don't consider this a swing high back in 1999 because it's just consolidation. This is going to be a marginal swing high. This is going to wreak havoc on the fixed income market. Okay. So the Fed, we're going to talk about the Fed too in a minute. The other thing I really want to mention, you should follow the financial. We're doing some good research our posts here. You guys should follow the financial stuff. So I want to get back to a tweet from like a few weeks ago. But I don't want to skip it. I should like keep that tweet permanently open. It's about monthly on average returns. I know I've talked about it before, but I really want to talk about it again. We would have tweeted it out in the beginning of September. Yeah, here we go. Beginning of September. Should be here somewhere. There it is. This is what I was thinking. Right? I can't believe it only has 22 likes and 10 retweets. It should have more. Look, historically, as I told you guys in the beginning of the month, September is historically the worst month for the stock market. This data is going back to 1950. Going back to 1950, we're talking 70 years. 70 years. Look at this dark blue line. The dark blue line is S&P 500 returns since 1950 for the month of September. It is by far the lowest bar, okay? The past 20 years, it is by far the lowest bar. The only other months that have lost money, on average, the past 20 years were June and January, okay? Now, what about the past 10 years? In the past 10 years, the only month that has lost you money was September, okay? And now we get to midterm years, and it's the third lowest. So we have lowest, not just lowest, the only month that's in the red, the lowest of 3 months in the red. Again, the only month that's in the red in the past 10 years is September. And in midterms, it's not as bad as June, for some crazy reason, but it's still a pretty bad month. So you can see how September is a total disaster. But now look at October. October is historically one of the best months in the stock market. So once again, all signs point to lows this month and a stock market rebound next month. Okay, keep this in mind. We talked about this in the beginning of the month, how September is one of the lowest months we have. Okay, now I also want to talk about the Fed. The Fed is announcing its rate decision, and it's expected that they're going to raise it about 75 basis points. So we will see how that goes. So you can see how right now we're at 2.375, and we're expected to go up to 3 or even 3.25, somewhere between them. So they may even raise it 100 basis points. This will probably be the final large raise that they do. Okay. And I talk about this all the time. Just go and Google this. I don't even Google the word announcement. FOMC drift. Man, I'm losing my voice. So all you have to do is Google FOMC drift. Okay, it's a paper from the Fed. It took 20 or 30 years of data, and on page 26, page 30, and we did this during the last FOMC meeting. I streamed it, or like 2 meetings ago. The best stock market performance day of the year is the day of the rate decision. The market goes up on average 1%, well, 0.5%, but lately it's been significantly higher. And it dips at 2 p.m. and then it rallies into 3 p.m. and then it just drips a little bit more. This is an incredible paper. And we can see almost every time there's an announcement, it follows this chart to the T. This is the day before the announcement. This is the day of the announcement. This is the day after the announcement, on average of 20 plus years. But they did this paper in 2013, and I've been following this for the last 10 years. And it's been doing this even more with bigger amplitude. And it's not going to happen every time, but every time I think it's not going to happen again, it happens again. It happens at least like 9 out of 12 times. It's an incredible opportunity. Like, if people only invested money on these 3 days during the drift, and they never invested money on any other days, they would. I mean, the stock market has done nothing on non-FOMC days. It's just an incredible paper, You have to know that information. All right, daily chart. This is the nightmare we're waiting for here. I mean, it didn't happen that fast. It's happening more slowly, but the concept, I'm just going to slide this over. The concept is still the same. I still think we're going to break down and make a new swing low. Like 16.5 is where I have some limit order set. And I think that's a good area for a buy the dip. We just made this swing low overnight. The month is going to come to an end soon. It's possible that this is the low, but I don't like the structure. I don't like this consolidation. The last time we had this consolidation, we crashed down. The only way this consolidation will hold is if this consolidation continues into mid-November. If we consolidate for another 2 months, maybe, like into the elections, without breaking the $19,000 low, I can concede that we're going to hold the channel, but it's too early. And unless the consolidation lasts so long that people are, hating Bitcoin, we are likely to drop down more than we are likely to go up. Oh, that's a good question. What do I think is the peak rate that they will reach? I think for the next 3 to 4 years, let me go back. That's a good question. It's a super good question. So I think we can get as high as 9%. I think we can get, like, this is approximately 10% here. I think we can get to the areas of 8-9%, which is normal. I think we can get back to that area. Okay. I mean, yeah, I think we get back to that area. I think we'll break this top. And then we're gonna pull back, and then eventually it will implode, and the US debt will implode. Yeah, so here's the statistics. So, and what we're looking at. Target rate probabilities for the 1st of February Fed meeting. Okay, so 1st of February 2023. So the highest probability is that the interest rate is 5% going into next year. Okay, so we're already halfway there. So daily charts discussed, short-term chart. Oh, wait, I want to take a look at the funding rate. So the funding rate has been all right, my back. My back. Hope I'm back. Yeah, a little bit of a internet issue this morning. Okay, now we're back. So last night, overnight, Bitcoin bottoms on the hourly chart with the MRI. Not a big deal. So again, once we broke this low, I was anticipating us to capitulate down. It started to happen. It then didn't continue happening. Let me make sure I'm back. Yeah, I'm back. But it never made it above any critical level. I would have needed it above the MRI resistance line, and it never made it above the MRI resistance line. And then once again, it came back down to support and it crashed. We have a new MRI resistance line, but I need Bitcoin to get above the prior swing high. I mean, I would need Bitcoin above 20,150 in order to be bullish. Now, once again, the good news is we can lower this bar. this bar keeps lowering. I mean, once Bitcoin goes above 21,000, that's it. It's rockets away, right? Because it'll be above all the moving averages. So the good news in these crashes is that the areas where you can go, all in, as they like to say, unleveraged all in, it drops down. My unleveraged all in is now 21.3. That's awesome. I love that. Oil. We talked about this. Another week is gone. Let's refresh this site. Talked about it yesterday. So refresh the site. Let's see where we are. Jesus. So we, our government. Oh wait, didn't refresh the site yet. They haven't updated the next number yet. They haven't updated week 3 yet. So they'll update it soon. But we're going to draw another 10 million out of this. So eventually they won't have anything to draw on. And I'm still waiting. Still waiting. We got one more MRI buy incoming. One more MRI buy. One more MRI buy is coming. Man, oil is going to explode to the upside. I don't believe the government is going to get to buy their oil to replenish the reserve at under $80 a barrel. I don't believe, I don't think they're that lucky. The Qs, I'll look at the Qs in a second. It's a good question. S&P monthly MRI. Okay, we're going to look at those. We're going to look at all those. Gold's a basket case. Okay, correlation between the stocks and Bitcoin. The stocks are in trouble. We are breaking the lows of prior support. Again, I would love to see an MRI buy in the stock market at the end of the month. We have a little bit, it's a troubling trade right now. In that, on the one hand, we've broken critical support levels and we should go down and make new lows. On the other hand, we have the month of September that is ending soon, leading to the most bullish month in stocks history, which is October. Okay, seasonality. It's also midterm election year, which also makes it super bullish. Any election year is a bullish year because going into the polls, the current sitting government wants the stock market to rise, which is why they're pissed at the Fed right now for raising rates. And so the chart pattern is calling for a down, but MRI buy is coming very soon. So that could call for a reversal. Now, here's our weekly chart. Our weekly chart could flip into a nice bullish trade. I'm really hoping this thing goes, like consolidates for a while and then explodes to the upside, especially without Arun. The Arun gave us an incredible weekly trade. On August 10th, the Arun told you to go long, and it told you to stay long all the way until right here. That was an amazing 9-month trade that I would love to see another one. This was not a short trade. It would need to cross at the bottom end. So if this thing consolidates a few more weeks, I would love to get another nice long trade indication on your room. Okay, where's the MRI? Why is it not showing up? Why am I getting an explanation? What's going on? Something's wrong. It works here. Why is it working here? Crap. Oh my, maybe it's shoot. I can't pull out, and I don't want to disconnect. Lose you again. All right, we're back again. All right, last try. That's probably why the MRI wasn't working. Yep, look at this. We have an MRI top on a monthly scale in the S&P. And we are on an MRI warning buy, which is great. So, but it's not going to be easy getting an MRI buy out of this. In order for us to get it, we will need to go below. We're going to have to go on June's low, but we do have to go lower than June's close sometime next month. That may not be easy. Okay. All right, guys, the internet connection is too unstable. Hopefully it'll be way better tomorrow. And thank you all so much for watching. And I will see you all on the next one. All right, we'll take a look at the Qs next time. But I believe the Qs are, you know what? No, I'm going to take a look at the Qs now, real quick. Keeping an eye on bit farms. Would love to see it go down to 73 cents. I want to take a look at the Qs. This is the NASDAQ. I should know, why am I looking at the Qs? I should be looking at like the NASDAQ itself, right? So, oh, the dollar. New all-time high, not surprising. I'll talk about the dollar next time. I'll talk about the currencies next time. I do need to glance at the Turkish lira because that's my next destination. Still devaluing, and the Russian ruble, which is holding steady. Okay. And now I want to take a look at the NASDAQ. NDX. Monthly. Same thing. Again, the problem is that in order for us to get an MRI buy, we will need to swing lower than June's low in October, which is supposed to be one of the best months for the upside. So if we crash with the Fed call later this week, we can achieve this. And then October is going to be a big rally to the upside. You can see how I expected the rally to start this October anyway. I drew this arrow back in May. So in May, I would have drawn this arrow, expecting us to rebound in October. I did not anticipate a bullish July into August. So I expected us to just go down, 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 reach this area in October, and then rally hard. This is obviously all drawings. I haven't done those in a while. And here is our S&P, same thing. And here's our Dow Jones. See, Dow Jones can give you the, oh, but the Dow Jones on a monthly scale, interesting, missed this number here. The Dow Jones is lagging on the MRI count. Interesting. See how the NASDAQ right here started the count. Started the count in February. So did the S&P, started the count in February. But the Dow Jones didn't start the count till April. That's unfortunate. This candle here closed slightly higher than this candle here. And that delayed the count by 2 months in the Dow Jones. Interesting. So they're not in sync. Okay. All right, guys. Thank you all for watching. Keep an eye on Wednesday is going to be a huge day. I really want to do a stream at this time. I will try. I have meetings at that time. And thank you so much for watching. Please follow us on YouTube, trying to get to that 1,000 subscribers. And I will see you all on the next one. Bye, guys. Oh, and also our research handle, Financial Summit. No politics on a Financial Summit handle, just research. Bye, guys.